Hi everybody, welcome back to another video. In this video, I'll go through Singtel's business, their recent earnings, and why their share price year to date has improved so much. Singtel is a leading communication technology company based in Singapore. It offers wide ranges of services including mobile, broadband, fixed line, and enterprise solutions. There are four main drivers for their core businesses. The first one is Optus, which is a telecommunication company in Australia owned by Singtel since 2001. Their business includes giving mobile plans, fixed line and data services, broadband for residential and businesses, and enterprise solutions such as cloud services and cybersecurity. The next big part of their business is Singtel Singapore, which provides services similar to Optus in Singapore. The third business is NCS. NCS is a technology arm which provides IT and technology solutions. They offer a range of IT infrastructure services, including data centers, cloud computing, networking, and cybersecurity. One of the more attractive part of the business is also the digital transformation, where they transform businesses through digital technologies such as AI or data analytics. The last and upcoming business is Digital Infra Co. This business essentially owns and operates data centers, fiber optic cables, and communication tower. Competition-wise, Singtel has two competitors in Singapore, and that is StarHub and M1. With the rise in the technology changes and AI development, Singtel must adapt to the new technologies and leverage them to their advantages. Now that we have talked briefly about Singtel's business background, let's take a look at their recent financial results. Looking at their first half of financial year 2025 results, Optus and NCS earnings grew significantly by 58% and 40% year-over-year respectively. They have also been effective in reducing costs in Singtel and Optus business, which is crucial as they are currently the biggest two business assets for Singtel. This led to higher underlying net profit of 6% and earnings of 27% increase year-over-year. Singtel has been busy developing and working with companies on data centers, which are the things that is in demand now. Nextra is the regional data center arm for Singtel's Digital Infra Co unit. This unit will be the future. With AI development, Singtel has been busy investing into data centers, which is through this arm. So Data Infra Co and NCS will be the main business growth to focus on in the near future. Revenue was stable, but earnings and net profit has increased. Hopefully, as the data centers comes online from 2025 onwards, it will be beneficial for Singtel. Looking at the individual performances, Optus and Singtel both experienced stable revenue. However, Optus had a good increase in the earnings of 58% year-over-year. The reason was because it was due to better mobile performance and margin improvement. This is very good because this meant that they are successful in cutting costs to make the business more efficient. As the cost cutting continues, this will help to improve Singtel's earnings naturally. NCS and Digital Infra Co is the growth drivers critical for Singtel's growth in the future. NCS is doing well with earnings increasing 40% year-over-year due to improve in margins and cost optimizations. Although this business is good, I feel that Digital Infra Co is the main future driver that will be important for Singtel. For this half results, it did not have much as the earnings was stable. However, they are busy investing in the growth, which is good for the long term. With data center being built, I expect the next 2 years for this business to grow and start earning more money for Singtel. Longbridge is a broker that has been in Singapore since 2019 and is licensed by MAS. Longbridge is a very clean and user-friendly platform that allows you to trade across Singapore, Hong Kong, and US market with attractive fees as low as $1.98 per order. They offer useful tools such as real-time data, company research tools, latest news, and charting tools. They also have a very good AI tool where you can ask on companies' recent earnings and analysis. In the season of Christmas, they have just upsized their offer. New users get lifetime commission for US and Hong Kong shares trading, and by depositing $2,000, you get an additional US $50 option cash coupon and additional $18 exclusively when you use my link to sign up. Moreover, by making 3 trades and keeping a net deposit of $2,000 for 30 days, you will get 1 NVIDIA share worth $180. By depositing $10,000 and make 5 trades, you will get 1 Apple share worth $310. Transferring shares into Longbridge can also earn you stock cash vouchers, AirPods, and iPhone 16 Pro Max. These are very attractive offers that you do not want to miss. Sign up with my link today and start investing with them. Thank you, and let's get right back into the video. If we look at this report page, there is EBITDA and EBIT. Usually, EBITDA is a good value because it is earnings before interest, taxes, depreciation, and amortization. This means that it's the earnings before all the random expenses. Breaking down the individual business margin, what we can see from the respective department's results. Optus' margin is at 27.5%, Singtel's margin is at 40.2%, NCS margin at 11.8%, while Digital Infraco is at a high of 50.4%. If Optus' margins continues to improve from the cost optimization, while the drivers growth of the business such as NCS and Digital Infraco margins continues to grow, it will definitely benefit Singtel. The risky part that might pull down the earnings will be with Singtel Singapore. Because the margin is so high at 40.2%, competition might come in and eat up their margins. But overall, I'm cautiously optimistic for their business as a whole. Debt-wise, Singtel is in a strong position as they have interest coverage ratio of 19 times, which shows how easy it is for Singtel to pay the interest costs on the debts. Free cash flow for this first half also increased by 9%, which is good for growth companies. Based on the financial year 2025 outlook, so far they are performing better with 27% earnings growth, even though they predicted a low double-digit growth. Moreover, the dividends are already met in the first half and might continue to be higher in the second half as long as their profits continues to go up. Currently, Singtel pays 70 to 90% of their income, which ensures the sustainability of the dividends. Thanks to the new management, they have been doing well to increase the dividends. Because of the valuation realization, they have declared 52% higher in dividends for financial year 2024 with dividend yield at 6.3% when the share price was at $2.40. However, now their share price have increased by a huge value of around 30%, so now the dividend yield is around 4.5%. Congratulations to those shareholders that have bought Singtel back when it was way cheaper in May of 2002. On the hindsight, it's hard to predict when is it the best time to buy a stock. It depends on your individual research and opinion when it comes to investing in a good company. So what can we conclude about Singtel's results? The new management that has taken over since 2021 has been making the right actions. Hopefully, the optimizing of the business will continue and make Singtel more efficient. Next, as the data center comes online for the next 2 years, I expect to see the profit from Digital Infraco to increase significantly based on the new data centers. This will be one of the catalysts for Singtel to increase the dividends. So what is the current risk for Singtel business? The mobile services part of the business, which is Optus and Singtel, still plays a very big part in their income. If the income drops due to mobile services competitions and the growth of the new businesses are unable to catch up, then Singtel will experience a drop in income and definitely risk lower dividends. Like the management has said, in order to make the dividends sustainable, they will only be willing to give out dividends which is 70 to 90% of their income. This is very important as sustainable dividends will be good for the long term. Thank you so much for watching. I hope you like the brief overview of Singtel's business. When it comes to investing for the long term, it's very important to buy the right company at the right price. If you have enjoyed the video, please support the channel by hitting the like, subscribe, and comment on what are your thoughts on the recent Singtel's performances. If you are interested in other Singapore stocks, you can watch my analysis on banks or other REIT stocks. Thank you, and I'll see you in the next video.